Might there be a new top G in town? And might that new top G be a trading indicator? Let's find out. And welcome everybody to the Indicator Profile series for Wednesday. We have another user submission. This is the second one we've done. If you recall, in the description we started adding a secondary email address for Stonehill Forex to where if you want to submit an indicator for us to profile here, you may do so. Now we don't do it too often, but we do it sometimes. And so this week we would like to thank Rob H. for his submission. Let's check this one out. Before we do that though, if you're new, understand that this is the premier indicator channel on all of YouTube. Always was, always will be. But we do things a certain way. It might not all make sense to you. What you need to do is go to nononsenseforex.com, read the homepage, watch that first video on the homepage, and get caught up to the rest of us. But for the rest of us, let's get into the specs here. The year on the G channel indicator is 2021, so quite recent. Definitely within the 1996 and on threshold we like to see here. Type's going to be a baseline. I haven't done a baseline in a little while, I don't think, so it's nice to have one today. And subtype, it's a baseline. And as far as exit indicators go, you guys know how I feel about baselines for this. I mean, you could try. You would have to speed the settings up quite a bit in all likelihood. But even if you do that, I still think there's better options. But that's just a personal opinion. So that being said, let's go ahead and take a look at the G channel baseline indicator. It looks like this before we make our changes. Now, what changes do you think we're going to make? Well, so you obviously have your baseline version right here in the yellow. And then you have these channel lines. I'm not sure what their purpose even really is. It just kind of seems to trace price up here. You do see kind of a situation where it flips to where it'll trace price here, but not here. And then it will trace price here, but not up here. Maybe there's a meaning behind that. I'm sure the blog will tell you all about this, but we only care about the yellow part. And so this is what we do to it. And now we have our baseline. Now you'll notice it doesn't move like a traditional moving average would. It moves more like the Kijun-sen in Ichimoku does, which I've always thought was interesting because you guys know I'm a big fan of the Kijun-sen. But just on the example, I think we see some really interesting things. So if you don't know, if you're brand new to the game, once price crosses and closes above the baseline, this right here will be your sign to go long. And then when it does the opposite, crosses and closes below, that will be your signal to go short. You see a couple of losses here right away. You don't see many, actually. It does a really good job of kind of preventing those bad trades from happening on a few situations here. But let's take a look at this right here. That would have been a loss, but this up candle is quite spiky. I don't think that would have triggered the rest of your algorithm in all likelihood. Same here with this candle. So if it did, those would have been relatively small losses maybe, or at least quick losses you can kind of recover from. But as far as the example goes, this thing is looking pretty good. The positive trades were quite positive, and the negative trades may have never happened. So we need to actually test this out. So we will do that next. But before we do that, just understand you must test this in your own system. Don't get too excited if these results are really good. Don't get too let down if they're not. All we really do here is profile these things to show you, and then you take it from there. Got it? Okay, and just know, down below in the description, you're going to want to go there because you're going to get a link to my automation blog that has an embedded video showing how to test these on your own on MT4, which is obviously very important. And then if you want further information on anything you see here on the Indicator Profile series, that's where the blog comes in, and that's also where Dan's YouTube channel comes in. The blog version and video version showing you real-time how this thing moves, showing you all the tweak settings that we don't show you here on the video. All that information is going to be down below. And then, like we said before, if you want to submit an indicator on your own, who knows? It might make the big show. This one did. So that email address is going to be down below. And then, obviously, a place where you can download all of these yourself for MT4. MT5, TradingView, we have no idea. You're just going to have to run a search. But that search is as easy as going to Google and typing in G channel MT5 download. And if something shows up, you're good to go. But let's go ahead and get into the results. Let's go to where we always go first, and that's going to be the euro dollar. So, mediocre from what we see in Forex. Not on 4 hour. Really couldn't get anything great there, even with the tweaks. Could barely get above sea level. But almost 8% here. Not bad. I mean, it's not going to be knock your socks off results like we saw last week with stable FX. For those of you who are Forex traders and you want to see something that really performed well, go to last week's video. But however, if you are a Forex trader exclusively, and if you don't like what you see in the very first slide and you just bounce, stick around to the end of this video. Hang out with us for a few more minutes. I have something to say about these results. So let's go ahead and move on to gold, where we're going to get stronger results. Now, gold has been stronger for us. Even with low win-loss ratios, which we have seen quite a bit here, you still get a really nice ROI. And that is generally what matters. Again, we've had much bigger results on gold in the past couple months even. But it's good to see a baseline like this perform really well in that regard. Over to the S&P. So it doesn't look really strong, but this is probably around my watermark in terms of if I would hang on to an indicator or not. That's actually pretty solid. I think we spoil you guys sometimes with some of the really high results. But if I saw this type of results here on indices, I would keep it and hang on to it. Maybe test it again a year later, maybe start adding it in some combinations. That's worthwhile right there. And then rounding off with Bitcoin. Certainly better. Again, we've had higher results in the past, but not bad. And here's what I want to say. When it comes to baselines, I think you have to grade on a curve a little bit. Now, most of us, I don't know, I guess we've really never had this conversation, but when you start putting your algorithm together, what do you start with? Do you start with your main confirmation indicator, or do you start with a baseline? I've always leaned towards starting with a confirmation indicator and having that be the root of my entire system. The baseline pretty much comes on towards the end. And of course, I want a good baseline that could perform well on its own. But to me, at that stage of the game, it's far less important. At that stage, I really just need it to help me filter out losses. So if you ever see adequate but not crazy good results on a baseline on the indicator profile series, I wouldn't get too bent out of shape. Again, I would keep it, especially because I'm a really big fan of that style, to where it's not like a smooth moving average, it's a little more rigid. So Rob H., thank you for this one. It is quite useful, in my opinion, despite overall results that my spoiled audience may not like or may not appreciate. Let's put it like that. But hey, spoiled's not a bad thing. We will continue to spoil you. Make sure you subscribe and hit the bell. So much we give you here. We have the Trading Psychology Podcast, the single most important thing I do nowadays, every Monday. Indicator Profile Series every Wednesday. Blog on Thursdays, and then Investment Podcast, a 10-minute contrarian every Saturday. A lot of markets are down, and this is the time where we really start putting things on our radar. So make sure you have all your bases covered, subscribe and hit the bell, and go get it.